You've had a great Canada Day and you're looking forward to Independence Day in the US if you're obviously a resident down south. We're going to continue our weekly topic here on the market, obviously focused on real estate here in Ontario. And obviously what we're seeing as, we're in July, we're past Canada Day, there's 6 months left in the year, and what this potentially could bring and where have we been in the last 6 months. So definitely stick around. I'm going to show obviously some, articles, show some data in terms of what we're hearing from big banks, also what we're hearing market news from actual individuals in the market. So stick around. I'm going to take you throughout the data also for rental, so you definitely don't want to miss this. Any comments, any questions, please put it below. And if you can also follow me on Twitter and Instagram. My Twitter handle and Instagram handle will be in the description. So reach out to me if you have any questions. Just before we begin, just a bit of a caveat. I am a wealth management advisor. I do this day in, day out, and I spend a lot of time researching. So this is not financial advice, but if you're looking, I always advise, hey, reach out to your financial advisor, someone you can trust, someone you can work with. If you have any questions for me, I already explained how you can reach out to me, so please don't hesitate. Again, any likes, any subscription will be much appreciated. So let's kick it off here. So this is an article just ending the week here on June 30th, and the first 6 months of 2022 have been unbelievable. And I'll read this to you. This was the worst first half for the market in 50 years, and it's all because of one thing: inflation. The last time the market has been this bad was since 1970. And again, in that time, inflation was, a concern. It's a concern now. So we've seen it in stock market, we've seen it in crypto, and I'm going to show you the numbers for housing as well. And obviously the housing market is soft. If you're a buyer or seller, you've probably experienced that. If you talk to real estate agent, mortgage advisors, brokers, it all depends on their perspective on what they're seeing in the market. But one thing's for sure, the market has been bumpy to say the least in 2022, the first 6 months, and we'll see how the rest of the 6 months go. And next, moving along, I want to share with you this article. This is, just a bit of a thread here from the Toronto housing market bubble. So Canadian home prices expected to drop 19% by 2023, and this is from TD, and this is from an article released on June 29th. And you can see that this individual already made a comment that we've already dropped 19% as of the first 6 months of this year. Now, let me take you into the article here. So, what is TD saying? TD is saying the Canadian home prices expected to drop by 19% by next year. As higher interest rates continue to squeeze spending power and rising inflation shows no indication of slowing, Canadian home prices and sales will dip considerably, according to the nation's largest lender. TD has officially downgraded their forecast for the housing market compared to their take in March due to monetary policy tightening at a faster than expected rate. The Bank of Canada, as if you've been following along, has implemented 3 hikes in its trend-setting overnight lending rate since March, and that's brought their overnight rate to 1.5%. At the lowest, it was 0.25 at the depths of the pandemic, and obviously as early as January. As consumer lenders base their prime costs of borrowing on this rate, qualification thresholds and payments have risen, markedly for variable mortgages and line of credit products. As I've been talking about this a lot with you guys, line of credit, variable mortgages obviously are being affected by the increase in interest rates. And the next interest rate is going to be on July 13th and is expected to be 0.75% or 75 basis points. So definitely prepare for that. We're only 10 days away from that as I'm recording this on July the 3rd. So TD expects the overnight lending rate to rise by additional 1.75% before the central bank finishes this hiking cycle, hitting a termination point of 3.25 by the last quarter of this year. That's going to continue to weigh heavily on housing activity, says the bank, which now forecasts a 33% peak to trough decline in Canadian home sales from Q1 of 2022 to Q1 of 2023 before buying activity starts to stabilize. In all, sales will drop 23% on an annual basis this year and 12% next. This will result in a 19% average home prices or drop of 19% over the same time frame. However, TD states TD's release, home prices are likely to grow modestly thereafter, along some recovery in demand. And I'm going to show you some numbers. I did show you some numbers last year. In certain regions, prices already have declined, double digits. It all depends on the region, and definitely look at one of my past videos in the last week or 2 weeks. I definitely showed that number, and I'll put that video in the description as well. Continue along, let me show you the numbers, what we're seeing from home sales and what we're seeing from prices. First, let's kick it off here with home sales. So this is from Daniel Falk. He's a GTA realtor, or real estate agent, I should say. So year over year change in June sales volume. So in Durham, we have negative 34%, Halton negative 43%, PO negative 52%, Toronto is at negative 43%, and York is at negative 52%. Now look at those numbers. You have minimum of 34% drop in Durham, and the largest drops are in Peel and York of at least 52%. So that's going to be the first indicator, which is obviously people buying less homes or that turnover happening less. Now, from the same individual, Daniel Falk, let's look at actually the GTA median home price. This is from February to June. So look at Durham, minus 26%. Look at Halton, minus 21%. PO, minus 20%. Toronto is holding strong because, again, Toronto is going to be the last to go in terms of seeing those declines. And York at minus 16%. And this is for all property types. So you can see TD has said they're expecting 19% drop. You can see here Durham has already dropped 26% from February. So that's telling you a lot in terms of what's happening. So price drops already in the market. So from a buyer and seller perspective, buyers obviously can take their time, look at what they want, and obviously negotiate more. Sellers are trying to find that sweet spot. What price can I potentially get for this property? And I've seen, and I'm sure you have as well, multiple listings, or termination. I list at one price, I don't get it terminated, I relist it at maybe lower price or higher price I was actually expecting. And what does this mean for the rental market? So here, no relief for Toronto rental market. This is from Alex. Again, he covers really the GTA and Canadian marketplace from a real estate perspective. Definitely follow him on Twitter because I always find valuable information. So you can see this swoop. So we can see a high during the pandemic in 2020 of rental properties on the market. Now we can see we're at a low, and that low is really driving up rental market prices. Rentals are expensive. There's actually some bidding wars happening as well for that. So, on both sides, you definitely have options on buying a house, but at the same time, if you're looking for rent, that has become more competitive than I've ever seen it before. So guys, I hope you appreciated this video. 3 thoughts I definitely want you to take away from this is definitely from a buyer and seller perspective. Buyers have more options. Sellers are trying to find that sweet spot. We're definitely seeing price declines both on a pricing perspective, and now big banks such as TD are saying that. And obviously we're seeing sales not happen as much as before. And third, the macroeconomic perspective is choppy to say the least. Inflation is still the key point, and that's something the central banks will continue to be aggressive. What that means, interest rates will continue to go up as they battle this inflation plague at the moment. So again, guys, any questions for me, reach out to me on Twitter or Instagram. You can always put a comment here, and you can reach out to me directly. And I hope you like this video. Please subscribe. Any likes will be much appreciated, and I hope you stay safe, and we'll talk again next week. Thank you so much for your time.